What's up, everybody? Today is July the 12th, 2022. I'm here giving you your daily wrap. Let's go ahead and start in this article that came out this afternoon regarding the White House and the CPI report that's going to be coming out. The White House is downplaying the CPI expectations because there's a lot of people with these crashing gas prices maybe thinking that inflation might have peaked, and the White House is kind of getting out in front of that and saying that this data is out of date, so maybe it's not going to reflect that in this report. So I thought that was interesting. President Joe Biden's aides have aggressively downplayed the expectations for Wednesday's consumer price index release because they say technical factors and how the CPI measures things like gas prices. So they're kind of saying, like, just because gas is falling a little bit doesn't mean that core inflation is necessarily decreasing. National gas prices are already down to $4.65 after being over $5 a gallon a month ago, and they expect the CPI to be elevated because of backwards looking data. So that's interesting. Economists agree that the report is going to probably be red hot, that it's gonna not look great still. And they say the core CPI that excludes food and energy is expected to rise 5.7% according to estimates, which would still be a slowdown from the 6% last month, but that's still really high. Usually the Fed wants on average 2% per year, so 5%, over 5% a month is pretty steep. And this chart just kind of goes over the 12-month inflation, where it's affecting each. You see gasoline is by far the highest, followed by transportation and travel, like hotel, household energy, used vehicles. Those have really been hit the hardest. And then IT hardware and services, rental cars, toys, prescription drugs, college tuition, those have remained kind of stable. So it looks like the White House doesn't really expect this report to look much better than it has in previous months. So let's get into stocks, though. This is what the S&P 500 did today. We opened slightly lower, and we rallied a little bit in the morning and then kind of sold off. After that, went sideways for most of the afternoon. And then you saw at the close, we really sold off heavy. So usually when you see a lot of movement at the end of the day like this, it's kind of indicating what institutional investors are doing, what the hedge funds are doing, and if they're selling at the end of the day, that might not be a great sign for the next day. But we got a little bounce here at the end, but still some significant selling at the end of the day on the stock market. The S&P 500 finished down about 0.89%. And I want to take a look at Bitcoin really fast too before we go. So Bitcoin, it's kind of trading in a range right now, but it looks like it's trending downwards. So it looks like we're going to test this line of support. That was the bottom from looks like June 19th. That's when Bitcoin really sold off really heavy, and it got down to like 17,000 at that low. It looks like we're kind of heading back down there, and we're going to test that. And like I said from the weekend video, if we crash through this zone, it could get ugly. So don't want to see that happen. Thank you, everybody, for joining me today. We'll see that CPI report tomorrow and see what the numbers look like. I wouldn't expect it to look any better than it has in previous months after this. But thank you for joining, and I'll see everybody tomorrow.